We've kind of seen the Santa Claus rally fizzle out. We're going to show the audience a chart really spelling that out. Do you see the potential for a market turnaround in January? And how do rates figure into this? I was looking at the 10-year, up about 15 basis points from where it opened just a week ago.
Well, yes, we have a potential for a rally. I think it's going to be different than what we saw last year. And rates matter an awful lot because you don't have earnings growing very fast. The expectation for S&P earnings, while they're percolating a little bit higher, they're not galloping away. So, and the rally that we saw coming into the holiday season, that rally was fueled almost entirely by a change in interest rate expectations. So, yes, there's a chance for a rally. Yes, it is very important what happens with interest rates, but the last part of this would be the rally that we expect in 2024 ought to be broader than the rally that we saw in 2023 in order for this to sustain from where it is.
Right. All right, yeah, diversification has been a big theme for the first few days of 2024. Before we get to that, though, I do want to talk to you about some research that came out yesterday. This one from Fundstrat. According to Fundstrat, this is their research. Until or unless 4665 on the S&P 500 is breached, this pullback should likely begin to stabilize and turn higher in the days ahead, technically, and this should begin Thursday, Friday of this week. That 4665 level is about a 2% decline from where we are right now. Agree or disagree with this technical take?
Well, we're not technicians at Washington Crossing, but what we would get at fundamentally is that you've got the market in the United States, the stock market, approaching once again $50 trillion in valuation. And to buttress that fundamentally, maybe you think about that relative to the underlying economy, which is about $27 trillion in size. So you're roughly 2 times GDP in terms of the value of the market. That would be a fundamental take on it. And the question to a fundamental investor would be, what happens to earnings and interest rates prospectively that would get us beyond that? So the short-term technicals, I'm going to leave to a technician, but the underlying economy, strengthen the underlying economy, some relief on interest rates would be what we would need to get the market to move meaningfully higher from here. And we really would like to see it broaden out with greater participation.
All right, so a lot of people are talking about small caps, value stocks right now as we continue to talk about that broadening. You say to focus on quality. In this situation right now that we're in, this environment, what exactly is quality?
Yeah, so for Washington Crossing Advisors, it would be any company that is durable, that's predictable, that's flexible. And to get there, you want to look for companies that have very low debt in the capital structure, profitable assets, and predictable businesses. And we just think we distinguish the quality focus. A bond investor, for example, would think in terms of quality first and foremost. And we would distinguish that approach from someone who might instead say, well, should I own value or growth? Which for us is really a non-starter as an investment question for forming a portfolio.